Good morning. This is Howie, and I'm here to help you win with money. The market is open, and you see it's a little bit red, but this is one of the best weeks for the market, so it may still turn green. And if it doesn't, it's still one of the best weeks, so I'm sure you had a profitable trading week. In today's episode, we're going to talk about software as a service. This video will be done just to talk about what it is, how and why we should invest in it, and I'm going to go into some details. So the first thing we're going to do is look at the definition. What is software as a service? And according to this Google search, it's just a software distribution model where they sell a product to you over the internet, or at least a connection to the internet. So we're going to use a spreadsheet, and I'm going to use that to type. Okay, so let's start off with a blank spreadsheet. First question is, why is SaaS or software as a service hot? So here you go. I'm going to just paste this out there to save some time. So the reason is, when you run a business, the traditional way is you would have to buy the computer or a server. You would have to buy all the software. You would have to then buy a redundancy or some type of backup system for the power. Then you need a tape backup for all your data or some type of off-site storage. There's a lot that goes into maintaining IT infrastructure, from your email systems to everything else. And even with Windows, if you remember how Windows used to be, I mean, it's the same thing. If you install the operating system, doesn't mean everything is done. We used to get physical disks for software patches. And obviously I'm dating myself. You pop in the disk and you install the update or the patch. Software has definitely changed. Software as a service has become a very popular thing. A big benefit for the consumer is when you pay for software that's delivered this way, you don't really care about the hardware is getting 5 or 10 years old. Maybe your internet speed is getting slower. You don't have to pay somebody around the clock to monitor your hardware or your computer servers or your data center operations. So there's a lot of other factors, but scalability is one great thing for the customer. You normally pay by seat or by number of users. So I can buy software for 5 people or 5 users in my business. And if my business grows to 1,000, I can just pay additional seats. Or some software don't use seats. They just pay for, I don't want to say per license or per company or per maybe megabytes or data usage, or however the revenue model is based on. That's how scalability works, right? There's so many different ways for you to scale. From the provider standpoint, it's the same concept. When you're starting out, you may only have 1 or 2 customers. And as your sales team keeps on pushing or more people hear about your business, you add a new customer, you may not need to add a new server yet, until at some point where your customer growth is outpacing your existing business. Then you need to upgrade, add more computer servers, add more storage, add more. You got to upgrade your hardware to keep pace with everything else. Next piece, what are some key factors of software as a service? And for most part, it's cloud-based. At least today, that's what it is. For those of us who've been around for 20 years, it's still a central server or central point of where all the data is stored. And then you have various places where you can connect. And a client is anything nowadays. It could be a mobile phone. It could be your car that's accessing data. It could be any type of device that uses that information. Software is always updated. I'm not responsible for doing the patches. New features are included. In the past, if you bought, let's say, Office 2010, that's it. You buy the software once, you paid whatever it was, $250, $400, or whatever it is, and that's it. And then a couple years later, a new version comes out. Office 2013 came out. And then a few years later, a newer Office comes out. but you don't get all those new features if you don't pay for them. Software as a service removes that. You're paying a monthly fee, and so people are just used to saying, hey, what's included is you always have the latest and greatest, and new features are being added. And in some software, new features are added monthly. Okay, next area I'm going to look at is what are some examples of some software as a service. And Salesforce.com is one. Dropbox is something we're familiar with. MailChimp for email. Apple iCloud, I think most people understand. But Netflix is also a software as a service. So is Amazon AWS. Microsoft is obviously a big one because they do it in Office. They do it in their gaming platform, and they also do it in their cloud platform, which is Azure. And then there's some other ones that maybe you know of, something like ClassPass for gym memberships or for gym classes that you can use different gyms. That was a big one. And Masterclass is something similar. You can learn or take classes from experts. So this is different from your subscription boxes that you may be thinking about. And for example, Book Club of the Month, Stitch Fix, Dollar Shaving Club, or Beauty Fix are very popular subscription that you can order, and once a month you get whatever is in the box delivered to you. And so this is a very different thing. This is not software as a business. It is a subscription, but we're going to look at why is there a difference. And the reason sometimes is simple. One is the definition is software, right? Here, you're not really using software to sell you a service or a product. Here, the key is you're physically buying a book, or you're buying fashion, or you're buying shaving cream, or razor blades, or beauty products, or makeup, or lipstick. And again, there's a lot of them, right? Even meal prep can become a subscription box now. But the difference is those businesses, while some of them can be great businesses, the margins are generally lower. And the only reason is because of the physical item that you have to deliver, which changes how an investor should look at it. You, as an investor, you want to try to invest in something that has a really good profit margin that can increase the profitability over time. And in other businesses, something like this, in a subscription box, the only way to make a lot of money is you got to win market share. Right? If you start with 1% of the market, you got to just win more and more and more until you get to like, hey, I own 50% of the marketplace. And then you make money on volume, basically. So it's sort of the Walmart model. Yes, Walmart can make money even on a 4 or 5% margin because they're doing so many billions of dollars of transactions. But you don't really want to be in a business like that. Sure, it works for Walmart, and I'm not saying it doesn't. But if, as an investor, it's easier for me to stick with something like this versus businesses like these. Before I continue, I pasted the fourth point. Make sure you like and subscribe. If you like this video or all my other videos, make sure you watch them. I am trying to help you win with money, and I'm always teaching, and I try to cover different topics because I love most areas of finance, and I have a good working knowledge of many different areas. So let's get back to this. Why does Wall Street like these type of businesses? And here's the answer. Loyalty or stickiness. Have you ever tried to use one of these services and then you realize one is you need it, and so that's a good thing, so that creates loyalty. But the second part is, even if you don't need it, how do you move off of it? It's not like your cable company. You're not going to use it for 2 months, cancel, and then you jump to the next carrier, and then you're going to get the best price by switching cable companies, and then you use that for a year or two, and then when they raise the prices, you're going to jump around, right? This is stickiness. They don't want you jumping from one company to another. So once you're on Amazon AWS, it is very unlikely you're going to jump around to another cloud provider. The customer revenues are much easier to calculate. And in the accounting world or business world, we use this MRR concept, monthly recurring revenues. It's a much easier for us to just look at, well, how much money did I make? In the past, if I sold you, let's say, MS Office, and then next month I may sell you Skype for Business, and then I charge you $5,000. That sale will go for whichever month that sale occurred in. And for the next 5 or 6 months, I may not have another sale, or maybe next year, or maybe 4 years from now. And then when Office, the new version comes out, then I say, hey, we got a new one and you got 1,000 employees. You need to pay me another $500,000 to upgrade all your old licenses to the new one. Rather, in this new subscription model, we say, okay, if you have 1,000 employees today, it costs $4 a seat or a license, and I charge you that. Next month, you still got 1,000 users, we charge you $4 a month. Next month, you got 1,200 users, that's the new monthly revenue. We time the number of users times the cost. And so what that does is it smooths out the sales from quarter to quarter. And Wall Street likes that because it's very easy now to predict the earnings per share on a go-forward basis. Because I can say, okay, well, I know how many users we have. Most companies are growing. You're not going to get less users. So it's a lot easier to predict the future revenue. And in subscription-based, we do want to track how many people are then losing business or leaving your service. And most companies' retention rates are generally over 90%. There's always going to be 1 or 2% or 5% of people leaving. That is pretty normal in most businesses. You look at cable companies, people leave. You look at almost any business, people cancel their service and they move on to another provider. Next question. Should you invest in software as a service? And the easy answer is yes. Based on all these things, I believe this is what makes these type of businesses even better than traditional businesses. If you think about Heinz ketchup, sure, you may need ketchup this month and you go and buy it. And then depending on how many hot dogs you eat or french fries at home, it may last a month. And you may or may not buy another bottle of the same ketchup. You may, when you go to the supermarket, what if you buy a generic brand ketchup next month because they had a buy one, get one free? And so there's a lot of things about traditional products that make it very hard for me to make you buy my product. But in software, using this particular model, once you're on the platform or a service, it is much harder for you to switch and change who you're buying from a month-to-month basis. So how do you profit from it? Here's some traditional companies that we know of. Things like Adobe, Zoom, Spotify, Datadog, Apple we mentioned, Microsoft. There's a lot of different ways for you to invest in this business. But I want to also bring up, what about non-traditional software as a service business? So let's look at some of those choices. The first example I'm going to bring up is Panera. Now, I know what you're saying. Well, didn't I just tell you, do not go with subscription boxes? And you are correct. I did say that right up here. So let's just entertain this idea first. Why is Panera offering a unlimited coffee that you can drink per month? You can, I didn't sign up for it, so I have no idea how it works, but I'm assuming it's using your mobile app. And you can just go in and maybe they scan a QR code or something, or your rewards number, and they know, and then you get your coffee cup. Coffee is a very interesting model because we do know coffee, like soda, can be a very high margin business. People pay $2-3 for soda when sometimes people say, well, how much is the syrup that they deliver to these businesses? It could be a few pennies, right? It could be 10 cents or whatever. It may cost more for the cup and the lid and the straw than for the actual soda and the ice itself. So in the same way, coffee is a very interesting way to play this. The next way is, what about gaming? EA, Electronic Arts. Electronic Arts have something called EA Play. You can buy a subscription, and there's about 6.5 million paid subs today. And it's the same concept. You pay to play. Microsoft has the same concept. They've been using something called Xbox Live, and they also have something called the Game Pass, where you pay a monthly fee to get some of the newest games that you can download. So there's a lot of interesting ways to play in gaming. So EA had a earnings release last night, so the stock is not doing that well right now. But I wanted to present this business case. Will EA move into a more software as a service business model? Now, if you are not a gamer, you may not know this, but most video game companies have. Look at GameStop. 20 or 15 years ago, everybody had to go to a GameStop or to a Best Buy and you buy the physical disc. Then you run home and you insert that disc and it reads the disc and you play the game. Nowadays, we know that you can buy a new game by going on into your Xbox or your PlayStation. You click on the game you want and you press buy. They send it to you. It takes however long it takes to download. And then, on top of that, then they want to sell you things like, do you want the limited editions football team or the cars or whatever, a new map. And so these digital downloads becoming a software as a service, right? You're paying for this service, or you have this ability to now buy content over the internet. And so companies have been moving away from physical discs. And I think EA also recognized that not only do you have to move away from that model, you want to move into a monthly subscription model. And they have done okay. They've done okay, and I think it's still going to grow. They don't have as many subscribers as Netflix, but I do think gaming is moving in that direction. Not so much in mobile gaming, mostly console. And I think PC gaming is also moving in that direction. That's what Microsoft is doing, and they're doing it big coming this week or next week when they release the new Xbox. When you join the Ultimate Game Pass, you're going to see that. And another one I'm going to bring up. How about the company that used to make Taser, or they changed the name, but Taser, right? This company now makes other products, and I'm going to show you that right now. Here you go. And if you look at this, why is this share price popping up? Well, let's take a quick look. I'm going to zoom out a little bit, okay? I'm going to show you something real quick. Here you go. There's an earnings, right? It went really well. Here is the body camera that are on policemen. It films everything. Let's just read this real quick. Here's the earnings. You see that? It went past record high Friday after the maker of tasers, body cameras, and cloud-based evidence system. Okay? This is the part that I wanted you to make sure you catch on. While they do sell hardware, like the physical tasers, how do you make money on that? Well, after you shoot your little taser, you need to buy the refills, right? So that's one way of making money. Cameras are the devices that they use to record, or dash cams, but they're bread and butter to this. Sort of like the shaving cream to the razor is the same concept, right? They will make more money on the way they store the videos that are from the dash cam and from the body cams. And if you design a software that makes it easy to report the evidence, then that is the key. As we scroll down, you're going to see this article continues. New contracts coming in. These are really good. And you're going to see something really interesting here. Largest ever contract signed at one point, $15 million. So that's a good thing. Earnings right here. Most analysts see their business growing at 15%, so that's a good thing. Their result, their earnings per share was up. Again, this is the actual results. Revenue is up. So this was really good earnings, and we can see the outlook. They're projecting out next quarter. So there's a lot of good things to like about this. The stock did shoot up, and it may already went past some of the analysts' their price targets. But again, if you're buying stock and you want to hold it for 5, 10, or 20 years, don't look at what the price is today. Look at the growth. Who else is competing in this space? And there are other competitors. There's other companies that are designing non-lethal or less than lethal weapons, is what the proper terminology is. And so the space it's not crowded, right? This is not like a retail store. It's not a crowded space. There's very few competitors. So this is why I like this type of business. And here's something that I really like. The body camera automatically captures video when a taser is removed from the holster. And I'm sure that can be also said about a gun or when the police officer gets out of his police car. If there's a mechanism that forces the cameras to auto record all the time, sort of like a dash cam, you're always recording. This is a great product. It protects the community. Now, obviously, police departments are not buying it to do that. They're buying it to protect themselves from other legal lawsuits that most of us have the right to sue, right? You have the right to sue a police department if they did not follow protocol and if they did something wrong. Evidence is preserved, and there is enough evidence to see or at least detail what happened on that day. The next thing I wanted to do is real quick is let's take a quick look at what other people say about software as a service stocks. And here's a quick article that is written not too long ago, a couple months ago. And everybody likes it. You can see that these type of businesses do really well. And if you bought DocuSign or Fastly or Shopify, there's a reason why they recommended this. I'm not gonna read everything, but you can see it. DocuSign is doing high growth. It's all digital documents, legal documents. You can sign off on things. Great business to have, and they're still adding new customers. Adobe is probably one of their biggest competitors in this particular space. Fastly does content delivery network. Again, growing business. CDN is what they call it. Akamai is their biggest competitor. And then if you go down here to Shopify, Shopify is a really interesting business. A newer version of eBay where you can run your own little shop through their services. In this article, this one is written 2 years ago, but it was updated at the beginning of this year, and it talks about why you should invest in software as a service. So I detail some of the examples here. Here you go. It gives you a really important key here. In the past, you owned software. Now it's access to software, right? You're buying access to use the software on a monthly basis. And it goes on. It talks about some of the things that we already mentioned. Cloud computing makes it easier for it. But I wanted to bring you down to the bottom here where it talks about like what companies and why you should invest in it. For those right here, the biggest advantage provides a wider economic moat or bigger competitive advantage. Switching costs can be really high. So these are the reasons why you want to use it. And look at this. In here, I wanted to show you why they also recommend it, right? Axon, because of evidence.com. It is software as a service for police department. And this is the reason why I invested in something like this. It's a non-traditional way to play. I also invested in EA because it's the same concept. I want a business to have a subscription model. And at the very end of the article, you can see here, this particular ETF invests in many of these type of new software companies. I don't think it's 100%, but I think they invest in a lot of it. And you can see this particular ETF has performed really well against the S&P 500. So what it tells you is it's not a 1 or 2 or 5 different companies like FANG that are winning. It appears that most companies that use this particular method are doing really well. There's a way to scale, and if you do it right, these companies can generate a lot of profits in the future. So I hope you enjoyed this episode of software as a service and why you should invest in it. Please do your own due diligence. Research the companies on your own. I am not a financial advisor. This is just for fun and entertainment purposes only. Don't forget to like and subscribe to my channel. As always, let's do this together, and let's do this $1 at a time. And I will see you next time.